Welcome back to the Daily Crypto Roundup, where we make sense of the noise in the markets and give you everything you need to know from today's crypto headlines. The last 24 hours have brought a strange mix of optimism and tension across the digital asset landscape. Bitcoin's pushing slightly upward again after a rough week. Whales are making bold, leveraged bets ahead of a major Trump-related announcement. Stablecoins are quietly cementing their place in global finance. And in a move that's shaken the entire industry, Donald Trump has officially pardoned Binance founder Changpeng Zhao. That's the lineup today, and trust me, there's a lot to unpack. If you haven't already, hit follow and leave us a 5-star review wherever you're listening. It really helps more people discover the show and keeps these deep dive roundups coming every single day. Now, before we jump into the news, let's take a quick look at how the markets are shaping up right now. Bitcoin sits around $109,600 after a bumpy but surprisingly resilient week. Ethereum is trading near $3,880, holding its ground after several midweek dips. Binance Coin is at $1,134 and seeing renewed interest following today's headlines. XRP is trading around $2.40, up slightly as traders react to rising volume. Solana holds at $191.50, continuing its steady climb since the last correction. Tron trades at 31 cents. Dogecoin sits at 19 cents and a half. Cardano at 65 cents. Chainlink around $17.44, and Litecoin rounds it out at $93. It's a market that looks calm on the surface, but dig a little deeper, and you'll see the tension building underneath. So let's start at the top with what's driving today's bounce. After nearly a week of downward pressure, Bitcoin's managed to edge 1.3% higher today. That might not sound dramatic, but in context it's significant, especially considering that most traditional markets have been wobbling. Analysts are pointing to a combination of technical corrections, short liquidations, and renewed institutional positioning. Barron's reported earlier today that long-term holders are stepping back in, confident that the recent weakness was nothing more than a mid-cycle shakeout. Several major funds, including Pantera Capital and Galaxy Digital, have added exposure, citing favorable macro trends as the Federal Reserve edges closer to rate cuts. Even though inflation data remains sticky, the overall sentiment is that the Fed won't risk strangling the economy this late in the cycle. That little glimmer of optimism has spilled directly into the digital asset market. But beneath that optimism lies something more tactical: a spike in Bitcoin's open interest. According to CoinDesk, total open interest in Bitcoin options has now crossed $50 billion, an all-time high. That means traders are positioning aggressively, hedging their bets on both sides of the volatility fence. This sets the stage for potentially explosive price swings if we get any unexpected macro or political news over the next few days. And speaking of politics, there's something brewing there too. Whale activity has surged dramatically in the past 48 hours, with on-chain data showing several large wallets entering 40x leveraged short positions. Cointelegraph reports that these trades appear to be timed around an upcoming Trump announcement. And the chatter among analysts is that big money might be bracing for a political shock that could temporarily hit risk assets. It's worth noting that leveraged positions at that scale can be both a hedge and a high-risk gamble. Some analysts suggest whales are deliberately creating volatility to trap over-leveraged retail longs. One crypto derivatives expert at Amber Group told TradingView that this kind of leveraged positioning often precedes major directional moves. Either we're about to see $120,000 in a flash or a sharp correction back toward $100,000. It's a stark reminder that Bitcoin's current calm could be a prelude to something bigger. Meanwhile, the rest of the crypto market is taking a different kind of bet, on stability rather than speculation. Stablecoins are quietly having their moment. A new report from CoinDesk shows institutional adoption of stablecoins has grown by more than 40% this year alone, with corporate treasurers and investment firms now using tokens like USDC and Tether as cash equivalents in cross-border settlements. Even major banks are starting to experiment with blockchain-based infrastructure for instant payments and trade finance. While this story hasn't grabbed the same headlines as Bitcoin's volatility, it might end up being the most important development of the year. The world's biggest asset managers are preparing for a regulatory green light that could see stablecoins treated like digital money market funds, fully audited, transparent, and integrated into mainstream finance. That move would unlock billions in new liquidity for crypto exchanges and payment platforms alike. Analyst Emily Parker from Masari told CoinDesk today, "Stablecoins are the bridge asset that crypto needed. When corporations trust on-chain dollars more than bank wire systems, you know the infrastructure shift is real." And then there's the story no one saw coming today: the presidential pardon of Binance founder Changpeng Zhao, better known as CZ. Donald Trump has officially pardoned Changpeng Zhao, the founder of Binance. That single move has sent shockwaves not just through crypto, but through finance, politics, and even diplomatic circles. Let's break down what happened and why it matters. Earlier today, the White House confirmed that the president had issued a full pardon for Zhao, citing economic innovation, global entrepreneurship, and the importance of blockchain technology to the future of American commerce. Within minutes, Binance's name began trending on X, and Telegram communities across the world erupted in disbelief. Some saw it as a historic moment of validation for the industry. Others saw it as blatant political opportunism. Just hours after the announcement, Binance Coin, BNB, jumped more than 9%, briefly touching $1,190 before pulling back slightly. Even Bitcoin and Ethereum caught some of that spillover optimism. Analysts say this isn't just a price reaction, it's symbolic. For years, regulators and policymakers have struggled with where to draw the line between enforcement and innovation. Zhao's prosecution was seen by many as the most visible clash between crypto's global ambitions and America's insistence on compliance. By erasing that conviction, Trump's message, at least according to his supporters, is clear: crypto is not the enemy. But it's far from simple. A former SEC advisor told Bloomberg, "This pardon blurs the boundaries between accountability and influence. It signals that large-scale innovation can override legal precedent, and that's dangerous if not handled carefully." Zhao himself issued a short statement on social media saying, "Freedom and responsibility go hand in hand. I'll continue working to make blockchain a force for transparency and trust worldwide." Whether you see this as redemption or political theater, the markets have made up their mind, at least for now. The narrative that crypto has friends in high places is back, and it's already shaping how institutional investors are positioning for 2025. One hedge fund analyst described it as the turning point moment of 2025. He added that, if the United States starts embracing crypto leadership again, capital inflows could multiply overnight. You don't pardon the face of crypto unless you're planning to use that narrative. Meanwhile, retail sentiment is surging again. Social engagement metrics on Lunar Crush show crypto-related posts up 42% in just the past 12 hours. Google's search volume for Bitcoin price prediction and Binance pardon has tripled since the announcement. Still, it's not all euphoria. Lawmakers in both parties are already calling for hearings, claiming that the pardon undermines ongoing regulatory reform. And within the crypto world itself, there's a subtle unease, the kind that comes from knowing how fragile this balance can be. Every time the industry gets too close to politics, it risks being defined by it. Yet in markets, perception often matters more than principle. Bitcoin's brief rally today wasn't purely speculative. It reflected a broader belief that the winds may be changing again. Institutional desks are already calling this the second 2017 moment, when the combination of regulation, politics, and public curiosity collided to spark exponential growth. But before anyone starts thinking we're racing back toward the all-time highs, let's temper expectations. Even with today's gains, Bitcoin remains 10% off its recent peak, and volatility is rising. The derivatives market is still heavily skewed toward leveraged longs, which can unravel fast if a surprise macro headline hits. That brings us neatly to what could be the most interesting twist of the day: a bold, almost outrageous new forecast that's making the rounds among analysts. According to Marcus Thompson, chief strategist at Orion Analytics, Bitcoin could hit $150,000 by Christmas. You heard that right. $150,000 by Christmas. His logic? A perfect storm of liquidity, sentiment, and narrative. Thompson argues that with US rate cuts expected before year-end, renewed retail participation through ETFs, and the psychological boost from Trump's pardon, Bitcoin might re-enter speculative euphoria mode. He's not alone. Fundstrat's Tom Lee echoed similar optimism this morning, saying, "If we clear $115,000 cleanly, there's no real resistance until $130,000. Momentum traders will take over from there. Others aren't buying it." One skeptical voice, Lynn Alden, known for her macro-based approach, warned that sentiment-driven rallies can overextend quickly, especially when they're disconnected from broader liquidity conditions. That's the tension right now. The market wants to believe the bull is back, but fundamentals are still playing catch-up. Network fees, on-chain activity, and stablecoin inflows are improving, but not yet surging. If history teaches us anything, it's that markets often run ahead of reality, and then reality eventually catches up. Still, what's fascinating here is how the psychology of crypto keeps evolving. Not long ago, news like this, a pardon, political involvement, sudden analyst hype, would have triggered chaos. Now, it's greeted with something more mature. Excitement, but also caution. The industry seems to be growing up. So, as we wrap up today's episode, the big takeaways are simple. Bitcoin's holding strong near $110,000, whales are preparing for high volatility, stablecoins are creeping further into the financial mainstream, and politics has once again reminded everyone how much power perception holds in this space. Tomorrow, everything could look different. That's the nature of crypto. But for now, the mood has shifted from fear to fascination, and traders are watching closely to see if this renewed optimism can hold into the weekend. If you enjoyed today's show, don't forget to hit follow, drop a 5-star rating, and share the episode with anyone who's been glued to the markets this week. It helps more than you know. And remember, none of this is financial advice. Just the daily story of the world's most unpredictable market, told one day at a time. We'll see you tomorrow for another daily crypto roundup. Stay sharp, stay safe, and, as always, we'll see you at the top.